Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, August 28th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES. Right now, you'll see August has been quite bearish. July quite bullish. July closing the month at the highs of the month, and then right away we thought that we could have a pullback to begin the month. That pullback could be a buying opportunity. If it fails at the mid, we drop down to the low and work our way downward. And that's kind of how it played out right away. Big dose of weakness right away. Right here, failed new high, closing below the mid, and could never establish acceptance above that mid and working its way downward. So we've had a very mature pullback so far for the month. Is this going to be an opportunity for bulls to come in and defend and buy for another push higher? Are we going to see another rotation up down the way, or do we break down through 4350 and open up a return even lower, 4150, 4200? Remember, we're working off of 150 point distributions right now, where we have the 4600, 4650 level right here. You have the basically 150 points down, 45, 150 points down, 4350. That day right there, we talked about it. That was actually the low, was 43.50 even. Price bounces back toward 45 and back down. So we're inside the 150 point distribution here. We fail at 43.50. We open up the next move to 4200 down below. So that's what we're looking for. Any push up here at 45 could be an opportunity for bears to reject on the right, the top of the right shoulder of this developing head and shoulder style pattern, for a rotation back down. Now, if price can push through 4,500, it opens up again the other distribution up above. But right now, trending lower, any pullbacks could be sold until proven otherwise. So watching this range very, very closely in the ES. We take a look at the NQ here. Similar price action in that we've seen some very clear market structure action here. 16K here, 15.4 here, and then you have 14.6 here as kind of the zone. So this is kind of your area right now. You're inside the top end up here. Again, if we rally up here, it could be an opportunity for bears to defend, and if it can push through 14.6, it opens up the next 1,000 points down. 13.6 is where year-to-date VWAP is. 13.5 is the previous year's midpoint. So again, failure to get above 15.4 opens up a move through the 14.6 downward, and you have 13.6, 13.5 down below. So watching to see how far of a pullback do we get through that 14.6 really starts to open it up. We take a look here at crude oil. This one's been battling the $80 level. We mentioned before that coming up here into this edge, we'd be watching for a rotation back down. Mentioned if we give up 80.5 here, the previous year's close, it could open up a rotation back down, back towards 74 or lower. And so far it's still battling that area. You can see here that blue dotted line, how it's been rejected here initially. Now it's coming back for a retest from below. Keeping an eye on that area. A rejection here keeps things focused on the downside right now. Overall, this market remains within that large 20-point range. You got 84 up here. You have the 64 down here, and you have the 74, which is about right there. That's your 20-point range. And at the moment, we're in this upper distribution here, trading in this zone. So again, if we can't hold 80.5, we could drop to the middle of this range and stay in here for a little bit. So overall, we're still in the range, still showing weakness off the top end of the range. And if we fail to find acceptance above 80.5, that could start to work things down back toward the middle of the range. So again, watching this zone here, we could have more sideways action with a downward bias up ahead. If we take a look at gold futures, right now gold showing a little bit of strength off the lows. It never hit any of the key levels below. It missed the previous month's low. It missed the 200-day. It missed 1900. Just kind of turned in midair. Little squeeze bar here on that bar, little retest bar here. This is the 1950 level. That's the level to watch. Very reminiscent of how price responded back here to the 1940 level, and it opened it up. So again, if we get ourselves a push through 1950 here, it could open up a stop run that takes us back up toward 2000 to 2010 in that zone. And that could be, again, another rotation back down within the range as this thing stays range bound. So 1950 is going to be the level to watch here. A push through that level opens up another 50 to 60 points to the upside in the near term. Lastly, taking a look here at the YM. Now the YM has been quite bearish here in the near term after breaking down through the 3-week narrow range here. This 3-week narrow range suggested a 1,500 to 2,000 point move. We clocked it at 35.4 as the breakdown, the top of the breakdown. That means as much as 33.4 on the downside. 33.4 is way over here. But again, 33.7 would be about 1,700 points, 33.5 in this zone. So you're seeing the potential here to get at least the top end of that 1,500 zone. 2,000 would be a little bit lower. So any pullback here could still keep us going to the downside. We have 33,800 as the next edge, and this is after failing at 34.8. So last week we mentioned any pullback into 34,800 could be an opportunity to sell. Price got super close to that zone here and dropped. This could be the same thing again. We could come up here and test prices of the previous week's high. Prices between 34,750 and 34.8 could be trapped again for a continuation into the previous month's low and that 33,800 level. So again, still trending down. If we pull back enough, that could offer an opportunity to sell for a push back down within the range. All right, that is it for now. We'll see how this plays out heading into the rest of the week. Good luck, trade well, and I'll see you in the trading room. Take care.